Individual investors who want exposure to the good returns that are expected from African equity and other markets have still relatively little choice of investment. And those that have launched African equity trust funds mostly offer these funds to institutional investors. So for more, I'm joined now by Humphrey Gatungu, who is portfolio manager at Stand-Up. Humphrey, it's an interesting story this, isn't it? On the one hand, we've got the Africa growth story. We see these numbers of 5%, 6%, 7% economic growth. Yet the stock exchanges, many of them are small and illiquid. So there's not much opportunity for smaller investors to get in there, and not much opportunity with big investments either. So perhaps just set the scene for us of what the problem is with investment in Africa.
Thank you. Africa is certainly growing very fast. If you look at the macro statistics that you mentioned, 5% economic growth, we see that pretty much everywhere. The market's also growing very, very much rapidly in size, but you're right, they are quite illiquid compared to, say, South Africa, which trades in excess of $1 billion a day. You'll find that perhaps the largest market in Sub-Saharan Africa, which is Nigeria, would trade in the order of $20 to $30 million a day. So it's necessarily much, much more smaller. Having said that, I think the opportunity is much, much larger. Why? Because Africa has still got very unregulated pension sector. And you'll find that, for instance, if you take Nigeria as an example, the pension industry and institutional industry is in the order of about 21 billion US dollars. But a very small percentage of that is invested in the equity markets, for instance. Now, as we see more and more regulation coming up that regulates the sector and forces local investments within domestic sectors, we will see these numbers rising up, and then we'll see liquidity also opening up.
But why wouldn't they be investing? I mean, even though it's a much smaller market, there would still be some good shares to be in. Are they still mutual companies? As in South Africa, we used to have Sanlam and Old Mutual, for example, which then listed, and it became possible to invest in them on the stock exchange. So why that? Is it a resistance, or what is the reason?
Certainly not. We do see them investing in certain equities that are on the market that are very attractive, and they do have some portions of their assets that are in equities. I think it's a question of relative returns. If you look at the fixed income market in Africa, it's still relatively attractive, offering double-digit returns with a fairly stable currency, in as much as domestic investors don't really concern themselves with currency as opposed to an offshore investor. So you'll find that they've invested a lot in fixed income and also in property, which are also offering very, very good returns. So we're seeing a very, very growing investment in equities, and that will certainly enhance the situation for funds like ours.
It seems that if you've got a reasonable amount of money, like a minimum 100,000 Rand to invest, then there are opportunities.
Certainly, and the reason for that is because that Africa is higher risk proposition if you compare it to, say, South Africa or even some of the more developed and emerging markets. And for that reason, we sell it to investors who necessarily can take that volatility. So we look for investors that have both the willingness and ability to take that higher risk that comes to them. But also with higher risk comes higher returns. If you look at just year to date, for instance, Africa funds have done fantastically well. You've seen some indexes.
Give a couple of examples there of if you put that sort of money in, what you've got back.
Well, if you put that money at the beginning of the year, just looking historically, which is not an indicator of future returns, but year to date, Nigeria Stock Exchange has gone is up at about 40% year to date. Kenya Stock Exchange is up at about 32%. These numbers are to the end of May. Obviously, in June, we've seen a slight reduction in these numbers on the back of the global backdrop, but certainly these are very, very strong numbers.
Of course, the other thing is that there's higher volatility. So yes, high risk, high reward, so you get the reward, but you never know when it's going to change.
Well, we look at the long term. We're not looking at timing flows or timing peaks and troughs. We're looking at investing for the long term, and that's another reason why we sell the fund to higher net worth investors who've got both the willingness and the ability, because we think that Africa is a long-term story. So we invest for the long term, that is 3 to 5 years, and we think in that time you will certainly see the returns.
What would you say is the value of this investment at the moment, and what is the potential? I'm talking the big picture of how much money is invested in these funds that are dedicated to Africa?
We've seen a lot of funds coming into Africa. When you look in the global macro, there's a global investor who's looking both for yield and for growth. If you look at US securities giving you very, very low returns, and looking at, say, the Europe economic zone that is very much in a recession, investors are looking for areas that have still got growth, has got good demographics, and have got good fundamentals underpinning that. That is found mainly in the frontier, and especially in Africa. So I would say that the outlook for Africa is quite rosy and quite optimistic. And again, if you look at the underpins that I spoke about, for instance, Nigeria, a very, very small portion of Nigerians actually have a pension. So, and those that do, a small portion of that is invested in equity markets. So if we widen that net, both in increasing the rate of investment in equity markets, and also widening the net to include pretty much everyone who is working in the economy, then certainly you've got a very, very good underpin for the equity markets, which is what you've seen in South Africa with its fairly well-developed pension regulation and stock market investments. And it's been possible to have the kind of market that we have, that is one of the strong emerging markets in the world. Certainly we see that developing in Africa.
Who are the typical investors? South Africans? Are there people from other countries off the continent of Africa who are using these funds to get into Africa? And I suppose that's another way of asking the question, how many people in the rest of Africa itself have access to this kind of investment?
Certainly, I think the more we see Africans buying up Africa, then we will see that region growing. And that stems right back even to trade. Africa doesn't trade very much with itself. So neighbors, you find that are not very, very strong trading partners. We see the same trends coming into our funds. We don't have much by way of African origins, or rather investors of African origin in our fund. And also that also extends to South Africa, for that matter. It's only recently that we've seen the South African regulation allowing a maximum of 5% to be invested in Africa. And we're beginning to see funds begin to take advantage of that. By that, I'm referring to South African balanced and growth funds that can now take advantage of that. I think primarily we've seen a lot of our investments coming from the rest of the world, that is primarily Europe and the Middle East. Those have been very, very strong investors into Africa.
What about at the lower end, where you have unit trusts, for example? So your ordinary person in the street doesn't have to have a lot of money to be able to buy unit trusts every month, and exchange traded funds, where you can, for a relatively low amount, get into buying the market. Now, presumably very small and illiquid markets, that's just not going to work.
Certainly it's not going to work for the reason of the liquidity, but also you'll find that the stock exchanges themselves are not that well developed and deep, and by that I mean that they're not representative of the economy. To give an example, again in Nigeria, you'll find that when you talk of Nigeria, you think about oil and gas, but on the stock exchange, they're actually not that by way of investments of companies in oil and gas, upstream oil and gas. So if you're looking to buy Nigeria for that reason, then you will not get that on the stock exchange, and that story is replicated quite across the continent. Therefore, if you're buying an index fund or an exchange traded fund, it will not give you the exposure to the real macro factors that drive Africa. So for that reason, you find that they haven't quite taken off. But again, as I said, as we see liquidity improving, we will see the advent of these funds, and then the cost of running these funds will then come down, and then offering retail investors an opportunity to invest in these funds.
From what you say, there's a disjointedness, isn't there, between the economies on the one hand and the exchanges on the other. You want much more alignment, don't you?
Certainly, and that is a process that takes time. If you look at some of the exchanges in the world, they've been running for quite a very long time, pretty much hundreds of years. Whereas Africa, some of the exchanges have been running for at most maybe 50 years, some much less than that. So it takes time for an economy to get to the level where people who need capital come to the exchange, and people who have got excess savings come to the exchange, and the exchange to serve as that intermediary of capital. That is a process that takes time for it to be done well, and it's a process that we've seen gaining in momentum, if you like. In the last 5 or so years, we've seen a couple of quite a number of listings and new exchanges popping up. Rwanda, for instance, is an exchange that is about 2 or 3 years old and already doing quite well.
You, in your business, you have, when you wake up in the morning or when you go to bed at night or when you wake up in the middle of the night, there are things that you look for. What are you looking for at the moment? What is your eye on when you're looking at this continent that offers opportunities?
I'm seeing positive trend lines, both from demographics. We're seeing young populations that are getting more and more active. They're well educated. They've got, a teenager in Africa has got just as much in common with somebody in Europe or in the US. I'm seeing democratization that is happening, and with that, good governance that is coming on board. I'm seeing talk of regional development, SADC, COMESA, because of the realization that African markets are small, and hence we need to come together to form bigger markets and also to form better trading partners. So those are the things that I look for. I also look out for political risk, which can be a great impediment to investments. Good to say that we've seen, again, positive trend lines in that, with the latest example of Kenya, having going through a very, very peaceful election, when eyes are now on Zimbabwe, which should be going into elections within the next couple of months. So those are the kind of things that I'm looking for when I'm making the investment.
It'll be good to see when the stock exchanges start catching up with the growth story, as we call it. Thanks to Humphrey Gatungu, who is Portfolio Manager at Stanlib.